Hello friends, welcome back. In this 25-minute video, I will explain the proposed plan to recover the balance amount of our maintenance deposit, which is lying with PSCL. Individually, it's almost 50,000 rupees, and collectively, it is 1.32 crores. The developer, of course, has intimated us that he is in no position to pay us the amount. Hence, this solution has been worked out to resolve the current impasse. So friends, the proposal that you are seeing now is the outcome of long discussions, email and WhatsApp exchanges, brainstorming sessions between legal subcommittee and the managing committee to work out various proposals over the past 3 months. The final Excel sheet has been prepared by our Honorable Treasurer, Shri Sandeep Pradhan. Sandeep ji is a chartered accountant. So the sheet that he has prepared is based on robust accounting practices and meets the highest accounting and auditing standards while taking care of our interests. Further, this proposal is acceptable to the developer. So friends, we all know the background. According to the agreement to sell, it was required that the maintenance deposit which was collected at the time of possession by the builder is to be transferred to the account of the society. This was agreed between the two parties, and accordingly 6.64 crores were transferred to the maintenance deposit corpus of the society. However, 1.32 crores are still pending and have not been transferred, and the developer has been quoting or citing post-COVID financial crisis as the reason. So we have to find a way out which will be hopefully satisfactory to both the parties. And because of that, we have engineered this particular arrangement. Before we continue further, I would like to give you a background of Section 70 of the Maharashtra Cooperative Societies Act 1960. According to this section, a society can only invest or deposit its funds in a few restricted ways. And these are securities specified in Section 20 of Indian Trust Act 1882, or in shares, bonds and debentures of other societies, or with banks in the form of fixed deposits or saving deposits or current accounts, or with non-banking financial institutions. Now you'll understand why it is necessary to work out a new arrangement, because AHPL and PSCL do not qualify in any of these specified instruments of investment or deposit. Since they do not qualify as financial institutions, therefore we would be violating Section 70, which is a punishable offense under the Act, under Section 146 and 147. However, we can find relief under Maharashtra government's Urban Development Department's notification for integrated townships dated 8th of March 2019. According to clause 10.3, the project proponent can collect periodic contributions to recover the maintenance costs of infrastructure of such townships or raise a corpus fund. It is under this clause that we are paying 1 rupee per square foot of carpet area per month. And it will be under this scheme that we shall be transferring our maintenance deposit of 1.32 crores to raise a corpus fund. So the rest of the video will explain how this corpus fund will be recovered from the builder. Now here is the plan in brief. As we all know that each member's share in the 1.32 crore works out to 49,624 rupees. Every year, about 5,000 rupees will be recovered from PSCL as a payment towards the township maintenance charges. 5,000 rupees from your annual contribution towards TMC which you make to the society will be transferred to the maintenance deposit corpus fund, which is defined in bylaw number 7N, 13E and 14F. Now, this proposal meets the highest accounting and audit standards, and the transfer of the corpus will be completed in 10 years' time. This chart will now show you how the corpus with PSCL keeps decreasing because they will be paying 5,000 rupees out of your deposit every year towards TMC, and how the society will build up its reserves. This is how the corpus with PSCL keeps decreasing, and this is how your contribution of 5,000 rupees a month will build up your deposit with the society's corpus fund. As you can see, we started with 1 crore 32 lakhs with the builder, and we will end up with the entire amount being transferred to us at the end of 10 years. While the arrangement by itself is quite simple, there is a little bit of a complexity. The simple things first. Every member's contribution is equal, 49,624 rupees. Also, the recovery from PSCL is going to be equal. It's going to be 5,000 rupees for 9 years, and then the balance will be recovered in the 10th year. Also, the interest will be at the rate of 8.5% per annum, and that is also equal for every member. The complexity arises from the fact that the township maintenance charges for each flat depends upon the carpet area. For example, the TMC for a 1 BHK 442 square foot flat, including GST, works out to 6,259 rupees. Whereas the same charges for a 2 BHK 833 square foot flat works out to 11,795. These are just two examples. However, out of the 266 flats that constitute our society, there are 20 different types of flats. So each type of flat will require a unique payment plan, and that will be explained during this video. This table shows you the TMC rate variation between different flats. Starting with the flat with an area of 426 square feet, the TMC including GST works out to 6,032, whereas the biggest flat has an area of 836 square feet, and the TMC rate for that is 11,838 including GST. Here is a brief summary of the payment schedule for a 1 BHK 442 square foot flat. As you know that the present rate is rupees 6,259, which includes GST. The new rate, as you will discover in the Excel sheets, will be 5,512 rupees till year 9. And thereafter, the new rate for year 10 will be 3,955. Year 11 new rate will be 955. Year 12 also will be 955. And the new rate for year 13 will also be 955. Now, over the course of this period, you would have earned interest at the rate of 8.5% per annum, and that will total 23,055 rupees. Similarly, this is the example for a 2 BHK 833 square foot flat. As you can see, the present rate is 11,795 including GST. Under the new rate of tax of recovery till year 10, you will pay 10,388. In year 11, that amount will be 2,810. Year 12, it will be 11,795, and 1113, the rate will be once again the old rate of 11,795. You will soon understand why this variation is there as we progress along in the video. Finally, once again, the interest that you will earn on your deposit at the rate of 8.5% per annum will be equal to what everyone else is getting, which is 23,055 rupees cumulatively. Let me now explain to you the calculation for the whole society, because once we understand this calculation, then we will be able to understand how we arrived at the rates that were mentioned in the two previous slides. The TMA rate, as we know, is 1 rupee per square foot per month without GST. The total carpet area of all the 266 flats combined works out to 1,45,978 square feet. So if you multiply these two numbers, you get the total TMC bill, which is 70,51,736 rupees. This attracts GST at the rate of 18%, and that amounts to 3,15,312 rupees. Now, if you add C and D, you get the total TMC chargeable, which is 20,67,048 rupees. As you know that every time we make a payment to a second party or a third party, we deduct a tax deductible at source or TDS at the rate of 10%. So before handing out this money to the developer for TMC, the society will be deducting a TDS and depositing with the income tax department, and that amount is equal to 1,75,174, which is 10% of item number C. Therefore, you will see that the amount which will be paid to the TMA will actually be 18,91,874, which is the total chargeable amount shown in row E minus the TDS. That amounts to 18,91,874 rupees. As we have seen in the previous slide, the amount which is payable to TMA after deducting TDS is 18.91 lakh rupees. The society pays GST to TMA, which is at the rate of 18% of the TMC, and that works out to 3,15,312 rupees. The balance, therefore, that is left to pay the TMA is the difference between item G and H, which works out to 15,76,562 rupees. Now, the society will recover 5,000 rupees per flat from your corpus. Each individual has contributed 49,624 rupees, and cumulatively we have paid 132 lakhs which are pending with PSCL. So the society will recover at the rate of 5,000 per flat, and that amounts to 13.3 lakhs. Now the balance interest recovery, that is the balance for recovery of interest from members, is I minus J. That is the balance left to pay minus the recovery at the rate of 13.3 lakhs per year. Please remember this figure because we shall be using this later. That amounts to 2,46,562 rupees. This balance is to be distributed equally in proportion to everyone's flat area. So let us see how that calculation goes. As we saw in the previous slide, the balance available for recovery of interest for members mentioned in point K is 2,46,562 rupees. If we divide this by the total carpet area for the society, which is 1,45,978 square feet of carpet area, we get point M, which is the balance available for recovery of interest for members for each square foot of carpet area. That works out to 1.689 rupees per square foot, and we shall see how to use that number shortly. Just keep that number in mind. Item M is the recoverable amount, and this will be the deduction given to members while calculating your invoice. We shall see how that works when you look at the Excel sheets. The calculations can be best understood with a concrete example. This is an example which shows the billing for the first year 2023-24. As you can see, it's for a 1 BHK 442 square foot flat. We have seen the calculation earlier. The TMC excluding GST works out to 5,304 rupees per year. The GST chargeable is 955, and the total TMC including GST is equal to 6,259 rupees. Continuing with our example of 1 BHK 442 square foot flat, the TMC as we saw in point number C works out to 5,304. From this you subtract TDS at the rate of 10% of this amount, which comes to 530 rupees. So the balance which is available excluding GST for payment towards your TMC is the difference between point F and G, which is 4,774 rupees. Now the recoverable from your corpus is 5,000 rupees per year for the first 9 years and then a smaller amount in the last 10th year. Continuing further, the interest which is recoverable at the rate of 8.5% on the balance remaining. Now what you see on the screen is for year 1, which amounts to 4,218. Every year your balance will keep decreasing. From being 49,624 in the first year, it will reduce by 5,000 in the second year and by another 5,000 in every subsequent year. So this point J amount will keep on decreasing. Now you will recall this interesting number which we saw earlier, and this is the interest recovery at the rate of 1.689 per square foot, and that amounts to 747 rupees for this example. The GST which is payable is 18% of point F, which works out to 955. So finally, what does it boil down to? It gives me the number which I have to pay. The member will pay the TMC 5304 plus point L, which is GST 955, minus the interest recovery at the rate of 1.689 rupees per square foot, which is 744. And if you do the arithmetic, it comes to 5,512 rupees. So this is what the member will pay to the society every year in the invoice. Now, after doing all this, what remains is unrecovered from PSCL, which is point I, 5,000, plus J, interest for the first year, 4218, minus H, balance available after deducting the TDS, and minus K, which is your interest recovery, which amounts to 747 rupees. So this amount remains unrecovered. Next year this amount will be less, and it will be still less in the year that follows. Finally, you will see that this is amounting to 23,055 rupees for every single flat, irrespective of area. This will remain unrecovered and will have to be paid at the end of the year, end of 10-year period, and will be adjusted towards your TMC for the next 3 years. Those of you who wish to see the calculation on an Excel sheet, here is a snapshot, but it may not be very easily readable on a mobile phone. Therefore, please go to the link of the document in the description section of this video, and then you can open the Excel sheet and refer to the calculation for the 1 BHK 442 square foot flat. Let me bring to your attention the fact that the interest recoverable factor at the rate of 1.689 rupees a square foot will be applied till year 9. In the following years, year 11 onwards, the recovery of cumulative balance will commence. What I mentioned in the previous slide is shown here on the extract of the Excel sheet. This is what I was referring to when I was talking about the recoverable at the rate of 1.689 rupees per square foot being adjusted in the last 3 years. Here is the calculation for a 2 BHK 833 square foot flat, and this is self-explanatory. We will now quickly go through the second example, which is for a 2 BHK 832 square foot carpet area. TMC for this flat is 9996 minus TDS at 10%, which amounts to 10,000 rupees. The balance available excluding GST is the difference between F and G, which is 8996. The recoverable from the corpus is 5,000 rupees, the same for every flat, because your principal deposit with the builder is the same or equal. Now the interest recoverable for the first year is also the same as for other flats, which is 4218. Remember, this number will keep on decreasing because every year 5,000 rupees will be deducted from the principal amount, which starts at 49,624 rupees in the first year. Now we come to that number at the rate of 1.689 rupees per square foot, and that works out to 1407. The GST payable is at 18% of TMC, which is shown in item F above, and that works out to 1799. So now I calculate how much a member will pay. The member will pay TMC, that is 9996, plus GST 1799 minus the interest recovery which the person has gained, which is 1407. The total works out to 10,388 per year. The unrecoverable amount from PSCL is the difference between the interest recoverable, that is 4218, and the interest recovery at the rate of 1.689, that is 1407, and that number is 2811. This will all be adjusted after year 10, as we saw in the example of the 1 BHK flat. Once again, this is the calculation for the 2 BHK 833 square foot carpet area flat. If you are using a smartphone, you may not be able to read the numbers. Therefore, I would suggest you click on the document link given in the description section and download the Excel file. So friends, that brings me to the end of this video. I will now present a summary. Remember, there's a lot of calculation involved, so you might need to stop, rewind, and replay in order to grasp how it applies to your particular case. Also make use of the documents which are linked in the description section, which will help you to see the calculation in the Excel sheets. The brief summary of the salient features is that this arrangement complies with the Maharashtra Cooperative Societies Act 1960 and the Urban Development Department Integrated Township Project notification. Also, it meets the highest accounting and audit standards. The total amount of our deposit, maintenance deposit lying with the developer, amounts to 1 crore 32 lakhs, and this will be recovered over the course of 10 years. But the final arrangements will take 13 years to complete because there will be some balances left to clear. The annual TMC collection rate remains the same. The only thing is the invoiced amount will be much less. The lower TMC contribution by each member has also been explained, and that will be variable for every type of flat, and there are 20 different types of flats in our society. We also saw how the 8.5% simple interest is worked out, and that the total amount earned comes to 23,055 rupees. So friends, thank you very much for your attention, and I hope I have been able to convey the essence of the arrangement that we are planning to sign with the developer so that we'll be able to recover our amount. Thank you very much, and bye-bye.